the stream, but hopefully things should be now working well. But please let me know if that's indeed the case, because unfortunately I'm struggling here a bit. But hopefully things are now up and running and they are now perfect. I think so. So guys, after this little technical issue, welcome back to Sudden Wealth. I hope you're having a wonderful week. If you do enjoy the content, as you know, please drop that like and subscribe. The channel is growing very well, approaching 610 subscribers, so I can only say thanks to all of you. I am going to give a little bit of time to see if people can join in. By the way, guys, if you do have questions for me, if there's something that I can help with, if there's something that you'd like me to address, just drop it in the comments and I will try to answer to the best of my ability. So let's start with a quick recap of what we've been seeing. So the bond market seems to finally be stabilizing a bit. We've had terrible weeks in the bond market, and I just find it funny because for those of you who've been following me since June or something, when every analyst was out there and every YouTuber was predicting, oh, the Fed's gonna cut rates, Fed's gonna do this and that, I always said, no, they want to keep rates high and they will let them go higher until something dramatic happens. Then they will intervene. But what they're looking for is higher for longer. This is actually what I said. And now it's just funny that I go check the Bloomberg articles, I go check the CNBC, and months later, they're talking about the market pricing higher for longer, like word by word of what I said. Now, I do think that the market got a bit ahead of itself. It's also a bit part of the common cycles in the stock market. October is always a very, let's say, volatile month for stocks because it's a month associated with big stock market crashes, which, to be fair, it's not wrong. I mean, you had the Great Depression, 1929, the big sell-off was in October. You had 2008, where stocks started to sell off in September, but they really accelerated in October 2008, of 2007, and then end of 2008, by the way, and then the Black Monday. You also had the big sell-off for the Black Monday, in which basically the market dropped 20-something% in one single day, which, to put things into perspective, we used to see, let's say, 1%, 2% moves during that period was something, huge. But now imagining 22%, meaning the first day you already have one bear market, was something that was always, was never seen before. And the bonds do control. Oh, sorry guys. One day I will have a proper setup here. I'm not sure if you guys can see me. My whole thing just went completely black. I hope you can see me. But in any case, bonds do control the overall market. What's happening at the moment is good news or bad news, meaning if the job data is stronger, then the market immediately prices in high rates, which basically decreases the value of bonds. Bonds are now worth what they used to be worth around 2006. So we just eradicated, 17 years of price appreciation on bonds, while people like Harry Dent and Stephen Van Meter have been telling you to go very heavy on bonds. I mean, what a great idea. Whoever listened to those clowns is completely destroyed, and I sad to say, but probably it's going to take years before you ever see any resemblance of break even on those investments. But this is what happens with these finance experts. That's why Steven Van Meter needs to be selling, stocks for cash. Needs to be pumping garbage stocks for cash on a daily basis, because that's what happens when you get completely annihilated with your trades. Now, it seems to me that the stock market is trying to put in the bottom. I do think we've maybe gone a little bit ahead of ourselves here. I did mention that as long as the S&P stays above 4,200, it's still fine. If we start breaking below it, that's where the real troubles start to pop up. Of course, Russell is much, is much more affected by this, and the reason is actually quite simple. With the yields moving so high, with the bond values coming so low, banks who basically have billions of these assets, of these bonds on their balance sheets going back, 10 years ago, they basically, if they would have to price those bonds at the real market price today, they would get billions and billions of dollars in losses. So they are praying and hoping that they can carry those instruments until maturity so they can get all their money back. But everybody knows, particularly the smaller banks, the regional banks, can be hit the hardest, and they are all in the Russell 2000. So that's essentially why you see Russell 2000 being negatively more impacted than basically all the other indices. And that's why I mentioned in my prediction that I did say that I would see a 50-50 chance for Russell to get to new all-time highs. I do see it less and less likely with the movement of the bond market as it is. And what it's important to note as well is that the movement in yields also impacts gold. So our friend Peter Schiff is actually quite sad, and we just went through the 200-week moving average on gold, and I am seeing very little support. I mean, I would say, German guy, thank you for your comment. It's about 7.7 billion. Do you mean the exposure of the banks? Or what are you referring to in particular? No, what I'm saying is actually quite simple, right? Which is if bonds keep moving the way they are, banks that were encouraged by the regulators to accumulate as many bonds as possible over the past 10 years, when interest rates were at historical lows, if they need to start to market those instruments, market to market, or need to sell them to basically get liquidity, to give deposit money back and things like that, they will be in very, very, very big trouble. But I am not calling for a big collapse of anything, because I do believe the bank's situation is very well known. So if banks start to struggle, there is one of two things that's going to happen. Number one, if it's a small regional bank, the Fed will just let it go, and it will probably be absorbed by a bigger bank for pennies on the dollar. That's number one. Number two, if it is a big bank, you better be sure that the Fed will save them. There is no doubt in my mind. They just need to open the discounting window, have some emergency credit lines given to those banks, and that's all they need to do. U.S. Department there has to be cashed out till 2026. I would say, isn't it probably more than that? I mean, you have if banks need to actually market to market their bonds just in the U.S., I think we're talking about trillions of dollars, and I do think that what's going to probably going to happen is uh, the Fed will need to start printing money, but not as soon as people think. So I would say probably, somewhere close to summer of 2024 is when you're really going to start seeing some rate cuts. But when they happen, they are not going to be 50 basis points rate cuts. They're going to be, 200 basis rate cuts and things like that. And the issue with banks is, as I was saying, if it's a small bank, I do think the Fed is going to let them fail, and then they get bought up by another bank for pennies on the dollar. But if it's a very big bank, they don't care. They will print as much money as they need to. They will buy up their bonds to lower rates artificially. Why? It's very simple. Even the public elected officials basically represent whoever donates to their political campaign. So they represent their special interests and the companies who are donating to them. In the case of the Federal Reserve, it is not even elected. It's a private organization. And it is a central bank, not a central department of whatever. No, bank. It's here to help the banks, not you, not me, not the economy. They are here to, at the basic premise, to represent the banks. Now, at the moment, I would like to address something else that I've mentioned. Apologies for that. God damn it. I hope it didn't break up too much, but today's not been an easy day here on this side. But in any case, I did predict a while ago that we should be achieving peak oil. Now, when I say peak oil, I'm not saying, oh my God, does that mean that oil will never cross $94 again? No, I didn't say any of that. What I said is that according to, the cycles that I typically look at, oil should be peaking sometime between late September, first half of October, and it apparently 27 September seems to have been the top. But now, with oil, it's always very difficult to say, because if there's a conflict which is getting worse, if OPEC cuts productions, if, if some tensions escalate, whatever the case may be, all of a sudden oil can, pop up quite quickly. But I did mention that I was a bit convinced that we should be topping out. And it makes sense, because in the newspapers, in the financial media, everywhere, basically, it was being said that oil funds make predictions of oil $100, oil $100. I say, oh, this looks like a very good place for us to stop. Just like everybody's waiting for the oil at $100, and it basically is around my cycles. I do think we may have peaked on oil at least until the remaining of the year. I like bonds. No, I don't like bonds. I think I've mentioned this before in the video. So the bond market has no bottom. So unless the Fed intervenes, the bond market, and unfortunately, eventually the stock market, they have no bottom. You see? And the reason is very simple. We have record debt that we've never seen before. And the question you should ask yourself is, okay, is the debt situation getting better or worse? It's getting worse. Why? Because you have trade deficits and budget deficits. So the debt is compounding. It's getting worse and worse and worse. So if the Fed doesn't manipulate rates, rates will keep on rising. Why? Because the risk of default of the US is rising. Why? Because debt is accumulating at a rapid, dangerous, unbelievable pace. So I hate bonds. Bonds is completely garbage. So for example, the US dollar, fiat currency, is garbage. Bonds is a promise of dollars in the future with a financial instrument called fiat currency, which depreciates, loses value almost every year. Why would I like bonds? it makes no sense to me. Bonds are only useful if you have a deflationary crash or when you're very convinced that the Fed is going to cut rates. So let me give this example. When would bonds be interesting? Well, if you have $100 million and you want to buy money market funds filled with 6 months to 2 year bonds and get paid 5.5%, that's $5.5 million per year for doing nothing. So in that context, for that person, it makes a lot of sense. Now, let's say that we have a huge spike in bonds, and bonds just go, I don't know, to 8%, and the Fed comes out and says, we are going to lower rates by 500 basis points. Then, if you actually buy that bond, you get the appreciation of the bond plus the high interest for whatever the time period is. But these are the only two conditions. So, for example, the trade of the century, of the last century, were when the Paul Volcker, the former Fed chairman, when he pushed interest rates to 20%, whoever bought 30-year bonds in that period, they made the trade of their life. But you're talking about very specific situations. So, I mean, no, I'm also not much in favor of gold, for example, because I increasingly believe more that gold is losing its space in the financial world. Like I am not sure people are convinced it is still an inflation hedge. I am not sure uh, what is actually the purpose of gold. Is it an industrial metal, a commodity? Is it money? Is it inflation hedge? What is it? Because gold should be outshining everything. I mean, no pun intended. It should be destroying everything, and it isn't. So I'm not sure. Now, what I'm trying to say here for the future, I do think oil is peaked, but it can be a little bit um difficult to say. But I do think maybe they've peaked. I do think stocks are probably bottoming out and will start to consolidate around here. I do think gold should stop around the 1800 and should consolidate. But no, I don't think you're going to see gold 3000 like Peter Schiff tries to sell you. That I don't believe. And I do believe we are progressing very well in the crypto cycle. So, shifting now to crypto, if you look at the cycle, we are actually, if you look at the fractal, meaning if you look at the previous example of other cycles in crypto, we are actually pretty much on time and on target with the old cycles. By the way, I'm not saying it's going to happen, but FYI, Ethereum tends to perform poorly against Bitcoin in quarter four. Now, I'm not saying it's going to happen. I'm just telling you what it typically happens. October should be a strong month for crypto, but unfortunately, I'm seeing a lot of people talking about up October and pump October and all of these things. And again, the same way that everybody was waiting for September collapse, when everybody's waiting for something on the other side, it makes me a bit, suspicious. I do think every month that goes by and Binance survives, Coinbase survives, etc., the less likely it is that we're going to have a black swan event that will force us to test the other bottom that we put in. You may recall that I mentioned to you in the crypto cycles about 50% of the time you do have a double bottom, but the other 50% we don't. So just because we had in the past doesn't mean we're going to have in the future. And what I think is going to happen is actually we're going to keep delving into the Bitcoin halving in late March 2024. I do think we're going to be moving into the beginnings of the bull market. And I like to see that crypto has been fairly resilient to all this nightmare in the bond market. In theory, and over time, I would expect that Bitcoin and crypto to kind of depeg a little bit from the other financial instruments. But it's actually encouraging to see that that we're starting to see Bitcoin and other cryptos to proving to be, if you will, a sort of alternative to all the fear that is spreading across the nation. Now, one thing that we need to discuss is the SEC is again fighting with Coinbase. Coinbase makes a very strong allegation, which is, look, guys, when we went public, we went under your regulatory supervision, SEC. You knew what we did. Why in 2021 you didn't care, but now in 2023 you do care? The reason is the SEC needs to show work after the fiasco with FTX and all the other exchanges, particularly because FTX was Sam Bankman-Friedman was the poster boy, favorite guy of Gary Gensler, because this is how stupid and how bad the SEC really, really is. Now, what did I mention around these things many, many times? I do think overall, in the long term, it doesn't really matter, because one of two things is going to happen. Either this clown in the SEC is going to be replaced, and basically the US will have proper regulators and will keep up its financial leadership in the world, or innovation will just go someplace else. UAE, the United Arab Emirates, is very friendly towards crypto. Singapore is becoming more friendly towards crypto. China, via Hong Kong, is also becoming more friendly. And in Japan, they are now starting to look into launching stable coins in other currencies than the US dollar. So what I'm trying to say here is that the innovation is happening, is just shifting to some other parts of the world. The highest volumes in the past few months of buying and selling has been in Asia, not the US. So unfortunately, for all the people in the US, for all the US citizens, this actually impacts, again, those citizens more rather than the rest of the world. There was a time when London dominated the financial world until they also had a clown regulator that basically took that position away from them, and the US became the leader and London lost its position forever. By the way, guys, I typically do 30 minutes live streams. If you could drop that like and subscribe in case you haven't done it, that would be great. So thank you very much, of course, for your support. And by the way, if you do have questions, feel free to drop them. And continuing on this topic, I do see a lot of good activity in certain projects. Somebody asked me about WorldCoin. I don't like WorldCoin because it forces you to disclose a lot of personal data, which is the opposite of why crypto was invented. Now, does that mean that it cannot go up? Of course it can go up. If more people buy than sell, price can go up, but that's not the point. My experience with crypto, and this is really the basic stuff, is that when you do things which are not linked to the purpose of crypto, when you do the opposite of why crypto was invented, you tend to get destroyed. That's it. It's very simple, so I try to avoid doing any of that. By the way, guys, if you have any projects that you like me to look at, just drop me also in the comment section and I will look at a few of them. Now, the key for the next cycle, and the next cycle can indeed be a super cycle, it's difficult. It's difficult to say what's going to happen in the future, but I would say if we do have a super cycle going forward, I think it will probably be the last chance to really develop generational wealth. What I would like to see in the next cycle are a few things, and here they are. I would like to see more countries than El Salvador adopting crypto as reserve currency and as legal tender. I would like to see, if I'm looking purely at price, BlackRock at the spot ETF, but also the Ethereum spot ETF and all the other spot ETFs which have been filed up for like Fidelity. I would like to see them all approved. Now, I need to make a caveat here because people always confuse this. I'm not saying that for the long term this is actually going to be good for crypto and for ourselves. What I'm saying is if you're looking at purely next cycle price action, you need big institutional money to come in. Very simple. You need to start seeing stocks coming into the blockchain. You need to start seeing more and more debt be issued on the blockchain. So you need to start seeing the traditional finance world coming into the blockchain and replacing the existing world. That's the point. The value is that it will replace, without counterparty risk, the legacy world that we have, so we can remove all these middlemen that do nothing but charge fees, make themselves very wealthy, but actually adding very little to the world. Now, I have been seeing an increased number of videos on AMC revenge trade, and I'm starting to get a bit concerned because I'm seeing some traction in these videos and actually convincing people to do this. So what's happening is, in case you don't know, AMC got completely destroyed. Adam Aaron has the possibility now to completely dilute shareholders to issue huge numbers of shares. And one thing that every ape that is involved in AMC should watch is the Q3 result, because Adam Aaron has said that they had the best quarter in the last 100 years. Now the question you should ask is, okay, if that is the case, if the company is not massively profitable and generates huge amounts of cash, then the questions you have to ask yourself is, okay, but then what do you need? Like, what the hell needs to happen for this business to work out? Right? So it will just tell you that, okay, as soon as something goes wrong, here this guy is gonna dilute us again. So this is something you need to pay attention. So don't fall for all these guys saying that now the shorts are ready to accept the MOAS, and now the MOAS is gonna happen, blah blah blah. But the worst part is actually that I'm seeing is these YouTubers that got you in the mess in the first place. They are trying to convince people to basically go into revenge trades. That means, did you lose money on MC? Go buy that, go buy the other, go buy the other. Be very careful with this. And this is just another way of turning you into their own mechanism of passive income. Okay? Be very careful about this, because these guys are popping up these garbage stock plays. Again, it's always the garbage. They never will tell you any kind of good company. It needs to be the most garbage possible. And be very careful, because these guys unfortunately are multiplying. And I have seen the videos and the comments, and they're actually succeeding in that kind of messaging. So I'm not telling you should go buy or sell anything. I'm just telling you be very careful and suspicious to what these people are promising you and what these people are trying to convince you to do. Don't forget that at the end of the day, you are their source of passive income, and they will always make money while you will always get destroyed. So be very careful with that. We are approaching the end, so I would like to thank you, the German guy, for posting a lot of comments. I hope I've addressed most of the topics he raised. If you guys still have some questions, feel free to drop them. Otherwise, don't forget, drop that like and subscribe. It greatly helps the channel. I will be traveling next week, Monday and Tuesday, but I will still try to upload I'm not sure if I will be able to upload videos, but probably not, but I will try. And thank you very much, guys, once again, for all your patience, for coming up with us. I am very excited because the crypto bull market is coming. The time for the happiness will finally come, in my opinion, of course. And after the big bear market and now the boringness of the recovery year, I have to say that I'm in the mood for a little bit of partying. So all the good things that I wanted to see are happening. If I look at 2019, if I look at 2015, the charts look identical to me, and which means that we are still on target for the next cycle. Will it be a super cycle or not? Stay tuned for all the things that I've seen, that I've mentioned, and particularly I'm starting to see more and more companies issue bonds on blockchains, which I understand that for the long-term view, for the people's money kind of view, it's not ideal, but it all depends on what's your target. If you're looking to achieve generational wealth in this cycle, this is all good news. But if you're a guy thinking, okay, but I want to be that this lasts 100 years and we will all make money in 100 years on this space, then it is not so good. Thank you very much. Also, Ross Palmer, thank you. Don't forget, guys, drop that like and subscribe. It's the only grift that I make. And I will catch you in the next video, and I will probably arrange some live stream also for next week. So thank you very much, guys, and I'll catch you in the next one.